helped China's economy end the year better than expected. Data out Friday showed the world's second largest economy grew 5% over the year, meeting the government's target and just ahead of forecasts. In the fourth quarter alone, it grew even faster, easily beating expectations. But Donald Trump is casting a shadow before he even takes office. Experts say some of the export gains may have been driven by overseas customers stocking up before he imposes new tariffs. With goods already secured, that could mean a corresponding drop in demand over coming months. Beijing policymakers will be keeping a close eye on the new US administration too. They've promised to do more stimulus measures to help the economy this year, but the size and scope of any moves may depend on exactly what Trump does on tariffs.
We're going to tariff the hell out of them.
During his election campaign, he threatened to impose levies in excess of 60% on Chinese goods. For now, Friday's data do suggest that existing stimulus measures are having some effect, even on the beleaguered property market. Though real estate investment fell again last year, December saw new home prices steady for the first time since mid-2023. Retail sales also rose last month, as consumers got ready for January's Lunar New Year holidays. Even so, economists say sustained stimulus will be needed, as China battles headwinds including local government debt and weak consumer demand, as well as the property slump. Demographics don't help either. New figures Friday showed the country's population falling for a third year, down by well over 1 million. That means fewer workers to support the swelling number of older folk, and an even greater strain on already indebted local authorities.
Glencore reportedly approached Rio Tinto late last year about combining the two big copper producers, but a source told Reuters that the discussions are no longer active. Rio is the world's number 2 miner, and Glencore is one of the world's biggest producers of coal and base metals. Bloomberg News reported on Thursday that the two were in early-stage talks. A merger between the firms would have the potential to be the largest ever in the mining industry. They have a combined market value of around $158 billion, surpassing BHP's $126 billion. Rio and Glencore declined to comment. Global miners have been sizing each other up as they look at ways to bolster their position in metals such as copper. Certain metals are set to be in high demand as industries shift to cleaner forms of energy. That was the rationale behind BHP's $49 billion failed bid for smaller peer Anglo American last year. Rio and Glencore have discussed combining their operations in the past. In 2014, Rio rejected a merger offer from Glencore, saying that it was not in the best interests of shareholders.
BP will cut more than 5% of its global workforce. The energy giant made the announcement Thursday. It's part of CEO Murray Auchincloss's efforts to reduce costs and rebuild investor confidence. BP told Reuters around 4,700 employees and 3,000 contractor positions will be cut this year. Last year, Auchincloss said he would cut the British company's costs by at least $2 billion by the end of 2026. He aims to boost returns and address investor worries over BP's energy transition strategy. The job cuts follow reviews of all of the firm's divisions. BP has a workforce of around 90,000. Auchincloss, who took office a year ago, will lay out his new strategy at an investor day in late February. He's already taken major steps to reverse the last CEO's strategy of shifting away from oil and gas. BP shares were up over 1% after the update.
Nintendo has finally revealed a successor to its big-selling Switch game console. The Japanese firm said Thursday that the Switch 2 would launch later this year. Its most obvious upgrade is a bigger screen compared to the original. The company said games from the first Switch would be playable on the new device, but not always fully compatible. It didn't reveal a price or many other details. Nintendo said more information would come at an event in early April. Thursday's news had been long awaited. The original Switch console transformed the fortunes of the Kyoto-based firm, after its earlier Wii U device proved a flop. Nintendo has sold more than 145 million units of the Switch worldwide. Its life has been extended by models with updated hardware and a series of hit games from franchises like Super Mario and The Legend of Zelda. But the console has been on the market since 2017, leaving gamers and investors both keen for an update. One analyst told Reuters that the Switch 2 would reinvigorate hardware sales for the company. However, another expressed disappointment that the device appeared to be more like an upgrade than an all-new model. Nintendo shares fell over 6% in early trades Friday following the news, having scaled all-time highs the day before.
U.S. stocks ended lower on Thursday as investors parsed the latest corporate earnings and economic data, and big tech stocks weighed on the Nasdaq. The Dow and S&P 500 both dipped slightly, while the tech-heavy Nasdaq shed about 0.9%. Shares of Apple dropped a full 4% after data research firm Canalys showed the iPhone maker was overtaken as China's biggest smartphone seller in 2024 by rivals Vivo and Huawei. Other mega-cap stocks lost ground, including Tesla, which fell more than 3%, and Nvidia shed about 2%. Meanwhile, retail sales data out Thursday showed consumer spending generally remained strong in December, but the increase was slightly lower than economists had expected. That added to a mixed picture reflected in other recent economic data, said CBIZ Chief Investment Officer Anna Rathbun.
Today, retail sales number, it was a little mixed. Headline was down, but core was up. I don't think the market knows what to do with this. So there's a little bit of sideways trading and directionless movement today. And I think the investors are probably going to be waiting for more definitive data and potentially the inauguration next week, because we'll start to have more clarity on economic policy and where we're going from here.
Stocks have struggled following a post-election rally, with the S&P 500 falling in 4 of the previous 5 weeks. Despite Thursday's losses, equities are on pace for a weekly gain. Among individual movers, shares of Morgan Stanley rose 4% after the bank said earnings increased in the fourth quarter, propelled by a wave of deal-making. Bank of America reported higher quarterly profit, but shares closed down nearly 1%. And shares of United Health slid 6% after the health insurer reported fourth quarter revenue below estimates.